Majority of day traders, they use price action to make decisions, and a lot of traders, we know that they are not successful when it comes to trading. And I don't say that the alternative methods like fundamental analysis or using indicators, I don't say it is better than price action, but I'm just saying that a lot of traders who are using price action are not successful. And I'm just going to be sharing with you some of the reasons that I've observed that make a lot of traders to actually fail. So I won't be analyzing anything on the chart, I'll just be talking. So what we have to understand is that usually when you are trading price action patterns, for an example, when you are trading maybe support and resistance, or when you are trading a trend or some kind of retest or whatever, you are actually assuming that the market is not going to change. Because usually when you make a decision based on what is already proven, and you believe that that which is already proven is going to continue for a longer period of time. When you see a range that is clearly formed, you believe that, okay, this range is going to continue to play out, so I'm going to buy at the support and I'm going to sell at the resistance, which is against the nature of the market. We know that the market doesn't move in the same structure. We know that the market doesn't move in the same direction. So the market changes now and then, but the way we use price action is if the market is going to continue in that particular move for a longer period of time. And that thing usually causes us to lose money, because for an example, when you're entering in a trend, you will wait for the trend to be clearly beautiful. You'll wait for your trend line to be touched and to be confirmed, and then you'll make a decision. And when you make a decision, it is usually late. The market would reverse and go against you. Why? Because you just waited very long. You just waited and you wanted to continue a move that was already there, and you forgot that the market actually changes often. The market doesn't go in one direction for that long. If you can just open your chart and look at how the chart is formed, you can see that it is usually changing frequently. So what you should be doing as a trader, or what you should invest into, it is actually trying to figure out when the market is beginning new moves. For an example, don't focus on trading a range when it is clearly formed, because that is usually late. Don't focus on trading an uptrend when it is clearly formed, because that's usually late. So focus on trading that particular structure while it is still at its infant stage, while it is still in formation. So make sure that you develop a skill set of identifying those reversal areas. So instead of you investing in continuations, but invest in reversal. So that is going to help you a lot. And another problem is that once we study price action, and once we know a lot of price action patterns or structures, we will then approach the market with confidence, because we have some kind of information that we know. And then we will feel like the market owes us. For an example, if you analyze the market and you open a trade, you see that, okay, you followed all the rules of price action, you open that trade, and when that trade doesn't work on your favor, you will feel offended. You will just feel pissed off because you did everything right based on the price action rules, but you forgot that the market actually doesn't care about your price action. It doesn't care about your analysis. So usually as price action traders, we should just allow the market to be the market. The market cannot be easily predicted. So you should come with that mindset and appreciate that fact that, okay, the market might surprise me today. And then when you accept that, it will actually be easier when it comes to risk management, because you will not be trying to outplay the market, but you'll be trying to actually participate in what the market is doing. So this is what I just wanted to share with you guys, which is something very, very important. Make sure that you just try by all means to do what the market is currently doing. Don't usually fall behind, because that's what usually happens. We analyze the market, but then the trade goes against us. Why? It is because we just made the decision very, very late, when the market was just about to reverse. And usually it is not that late, but it is just that the market just moves in a random order which we can not easily predict. So we should also appreciate that fact as traders, that okay, if you analyze a trade, no matter how beautiful it looks like, it is likely that it's gonna go against what you've anticipated. So accept that and make sure that you put your risk management in place.